Welcome to the third episode of How to ThinkScript. We are TOSindicators.com, home of the Volatility Box. The Volatility Box is the most robust thinkorswim indicator based on statistical models built traditionally for large institutions and hedge funds. We break down that barrier and make it available to the everyday trader. Today, we're going to build a manual backtester for the TTM Squeeze invented by John Carter. The purpose of building this backtester is to try and test out some of these different settings for each ticker and see if there might be more optimal settings than what thinkorswim gives us by default. This is inspired by John Carter's latest webinar, an indicator in which he talks about having found better settings for the Squeeze, which he's now dubbed the Squeeze Pro. Let's see if we can try and find some of these settings that work better for some particular tickers that we might like to trade. If you'd like to skip the tutorial and start playing with the strategy right away, it's available for download for free on our website. The link is in the description box below. So let's dive in and see how we might be able to backtest some of this ourselves by creating a strategy instead of a study within thinkorswim. Let's start out by clicking the studies icon in the top right. Except this time, instead of clicking create here like we normally would, we'll switch on over to the strategies tab. This is a very important step, as switching over to the Strategies tab allows us to actually test something out and have thinkorswim spit out an end profit and loss report that we can then analyze and study and just get one final dollar amount to compare each of our different settings to. Within Strategies, we'll click Create, and here we'll get started now the same way we would with creating any other indicator. We'll start by giving this strategy a name. We'll call it TTM Squeeze Backtester. And now we can start by actually writing the code. Our first step should be defining the variables of the settings that we would ideally like to change. If we see here in the background with the TTM Squeeze, we see that there's a handful of parameters. We see there's close, which just mean which of the prices we'd like to take. This one will most likely leave stagnant. Then we have length. Length is something we would like to change. And then we have two other variables that John Carter has defined as an NK factor and an NBB factor. Each of these are things we would like to tweak. And then the last one is 1.0, which is the alert line, which is not really something that we care enough to tweak about. Okay, so let's get started by defining the variables that we actually want to change or test out in this new TTM Squeeze that we're going to create. So we'll start by defining the length first, and we'll say this is equal to 20. Then we'll bring in the NK factor, and we'll define that as the 1.5, which is the default. And then we'll define the NBB, which we'll define as 2.0, again, the default. Also, we'll want to actually bring in the squeeze here, but the thing we actually care about the squeeze is whether the squeeze alert has triggered, which is whether it's a red dot or a green dot. So to do that, let's define the squeeze. We'll say def squeeze is equal to TTM Squeeze, and we'll use close. But now instead of putting in numbers, we'll actually bring in each of our user input variables here. So we'll say length, NK, NBB, and then we can close this out for the last one since that's a static alert line, and we'll say this dot squeeze alert. Now this should actually be representing the squeeze with any of these settings that we would like to change along the way. Along with the squeeze, one of the fundamental things that people forget is the direction in which you'd think the squeeze is likely to fire. Most people use histograms. However, if you've actually read Mastering the Trade by JC, you'll remember that he uses moving averages as a means of determining what the overall direction of the market or the underlying symbol is, and use a squeeze to trade in that same trend. So let's figure out an easy yet simple way to create a trend indicator to define which way we think this squeeze is likely to fire. To do that, we'll use the relationships between the 13 period, the 21 period, and the 34 period exponential moving average. Okay, so let's actually start by defining the 13 period exponential moving average. So we'll say def EMA13 is equal to exponential average close 13. Perfect. And now we'll repeat this for the 21 and the 34 just by copying and pasting, and then change each of these numbers so that they represent their respective moving averages. Now that we've done this, we have each of these exponential averages defined, and now we need to create some sort of a relationship between the two to identify if we're overall bullish or bearish. So we'll say for the bullish, we would like the 13 period moving average to be above the 21 period moving average, and the 21 period moving average to be above the 34 period moving average. And for the bearish, we'll make it the exact opposite. So we'll say here it's below, and the 21 is below the 34. Whoops. And now, if neither of these are true, we'll say that the market is in chop and we have no clear clarity on trend, and therefore no trade. Now that we've defined the squeeze and our bullish and bearish scenarios, we'll use the rule of John Carter's trading rules and say that we must wait for at least 5 of the red squeeze dots before we can get into a trade. So let's create a condition for that. We'll say def 5.squeeze. And here we want the sum of squeeze, which would return a 0 if we're in a red dot from right up here where we defined the squeeze. So we want the sum of that over 5 bars to be equal to 0. If it is, this will return true, and if it's not, it will return false. Now let's bring all of this together and create an actual bullish signal in which we combine both the bullish bias along with the 5-dot squeeze. So we'll say def bullish signal is equal to if 5.squeeze and bullish, then 1 else 0. And we'll do the same for the bearish signal. 5.squeeze and bearish, then 1 else 0. Okay, perfect. And now we also need to define an exit condition. To keep things simple right now, we'll define the exit condition as whenever the EMAs cross from bullish to chop or bearish. We'll identify that with the 13 period crossing below the 21 period for a bullish or above for a bearish scenario. So we'll define those conditions now. So def exit bullish trade, and we'll say this is if the 13 period moving average is now less than the 21 period moving average, but on the previous bar it was greater than or equal to the 21 period moving average. And if this is true, then we'll say yes, and otherwise 0. And now let's copy paste this for the bearish scenario as well and change each of these to be the exact opposite. So we'll say if the 13 period moving average is now greater than the 21 period moving average, and in the previous bar it was less than, then return true, otherwise return false. Now let's bring all of this together with the add order code in which we actually let thinkorswim execute each of these trades. So we'll say add order, order type, buy to open. And here we'll say if the bullish signal is true, then take the trade. And if it's true, then take the trade at the closing price of whatever the candle is. And we only want the quantity to be, let's say, 100 for 100 shares of stock. And now we'll create the closing order. So we'll say add order, order type, sell to close. And we'll keep this simple and we'll say exit bullish trade. And once again, we want to get out at the closing price and get rid of our entire position of 100 shares. Now let's copy and paste this for the bearish scenario. Here we'll need to first change this to say sell to open, and the next one we'll say buy to close, just so that they're reversed. And these conditions will also need to be reversed, so we'll change this variable to say bearish signal, but we will leave this once again at the closing price and to take 100 shares short. And here we would like to say exit bearish trade, and once again at the closing price with 100 shares to buy back long. Let's go ahead and click OK, and let's see how this looks so far. Okay, so what we see is it is taking a trade whenever we have the 5th dot squeeze, and it's getting out when the 13 period crosses below the 21. And we can go ahead and actually test this out by adding in the exponential moving averages. So we'll bring in the 13 period exponential moving average. Whoops. And we'll give this a color of cyan. We'll bring in the 21, and we'll give this a purple color, and then we can bring in one more, which is a 34, and we'll make this, let's just say, a yellow beige. Okay, so what we should see if our code is written correctly is it took the entry, in this case bullish, since all of the EMAs were stacked, on the 5th dot, which we see down here. It is the 5th dot. It took it at the close, which we see it did in fact do at the close of the previous bar. And then we see that it exited the trade whenever the EMAs cross below. So in this case, we see that this trade was at one point a slight winner, at least 3.96%. We ended up getting out for a loss since we had only put in the conditions of seeing whether the 8-period exponential or the 13-period exponential moving average crossed below the 21. So now let's go ahead and add in one more condition to take this off at a profit target instead of waiting for the EMAs to cross. So to do that, let's go ahead and create a new add order type. In this case, sell to close once again. And this time we'll say if the high is greater than or equal to the entry price, which is a variable already built in where it saves the entry price from the open orders. And so if that is greater than the entry price plus, so let's say 3%, so the stock price needs to have gone up 3%, then yes. And then we'll also make sure that this is the price in which it closes the order out at, and we'll want to get rid of all 100 shares. And we'll go ahead and do the same thing for the bearish side. So we'll say add order type, buy to close. And here we'll say low is less than or equal to the entry price minus, and then the same logic here, we'll say entry price minus 0.03. And then we'll say, once again, we want the price that it actually executes this order to be the entry price minus the 3%, and get rid of all 100 shares if the condition is true. Okay, so now if we click OK, we should see that it should have fixed some of that. Perfect. And so we see that it did in fact take some of these profits that we thought it should have taken. What we also see is the two squeezes are currently not the same because the NK factor right now we have as 1.5. And we'll change this back to 2.0 so that it matches with this squeeze. Okay, perfect. And then one more tweak that we can go ahead and make before we start seeing how this actually looks is turning on the floating P&L. So to do that, we'll click the studies icon, click global strategy settings, and here we'll want to make sure that this is checked, display floating P&L study with strategies. Okay, so what this lets us do is on a quick zoomed out scale, we can see that these current settings for the squeeze using the conditions that we've implemented result in an overall negative P&L, which if you right click anywhere where you see TTM Squeeze Backtester and click show report, you can also see that the overall P&L was actually a negative 1,196.40 over 3 total trades using these conditions on at least Goldman Sachs. So let's go ahead and try just tweaking this now and playing with it a tad. So now if we change this 1.5 to 2.0 and had the settings be 20, 2, and 2, let's see what that pans out to be. Oh, that's even worse. And if we change this to 1.5, ooh, we see that being as really, really terrible. Now let's come in and switch over from Goldman Sachs to Apple. That's interesting. So we see that Apple, using the same settings, is actually a pretty good P&L overall. We have a P&L of 1689 positive over 13 trades. Let's try tweaking this just to make sure. And we can see very quickly using this floating P&L if these settings work better or worse. And so if we change the 2.0 back to 1.5, we see that the P&L actually dropped. And now if we change this back to the default settings of 1.5 and 2.0, we see that these settings actually worked out pretty well over just 2 trades, but we only had 2 trades here. Now let's try and drop this down from a daily chart to, let's say, a 30-minute chart and measure the same settings to understand what the sensitivities look like on a smaller time frame chart. And so here, if we come in, we can tweak this from 1.5 to 2.0. We see that the P&L is still negative, at least over the last 10 days. And if we change this to 1.5, oh, we still see negative. And so what we've learned from this is there needs to be more changing and finessing with each of these squeeze settings, but you see that the squeeze is different with each ticker. And let's try one last one just to see what that looks like. We can change this from 20, once again, to 1.5 and 2.0, which is the baseline. And we see that this is strongly negative. Let's go back to the daily chart. Oops. Oh, that's interesting, the 4-hour chart. Let's try the 4-hour chart. Okay, so we see 927 is the number to beat. And let's keep tweaking this. And this is exactly the process of backtesting. It's a very manual, laborious process, but what you find are different patterns, different tendencies, and you start to make a note of these and you study them. So let's just finish this out here. Let's try that one setting. And we see that if we use the settings, which are, I believe, the default squeeze settings of 22, actually, no, it's 1.5 and 2.0, we'll see that this should actually be a much better result than if we had tweaked them to be a little bit more sensitive. And now if we just change this length from 20 to, let's just say we change that to 15, what does that do? We see that that didn't change too much besides giving us less trades. And if we make this 10, we see that that also impacted the results. And now if we go the other way and change this to 30, we see that there are actually no trades that were taken. And if we come in here to length, we'll see that that is actually a negative overall setting with just the one trade that we received. Versus if we came in here, we changed this to 20, we changed this to 2.0, and we left this at 2.0, you should see that this actually turns out to be a positive trade with an overall P&L of 1368.70 over 12 trades. So as you see, there's a lot of playing around that you can actually do here. I'll let you actually play around. You can tweak this code. You can add in more settings. You can bring in more indicators. You can refer back to the previous 2 weeks worth of thinkScripts and bring those studies in. There's a lot that you can play with to essentially create an endless stream of backtesting to whatever conditions that you actually care about. That concludes this week's episode of How to ThinkScript. I hope this helps to give you a starting block to play with the squeeze and find some of the best settings that work on tickers and timeframes that you like to trade. Thanks for watching this third episode. Once again, as usual, use the link in the description box below to download the strategy code for free. If you have any indicators that you're looking to emulate or would like to help build, feel free to comment below or through our website, and we'll definitely give that another go. Till next time, thanks again for watching.